ASX reporting season has kicked off. In this week's Investor Spotlight, we look at the key themes for this reporting period and preview 3 stocks to watch in the week ahead. The ASX 200 got off to a blistering start in 2023, rallying by as much as 7% before pulling back as the reporting season got underway. Easing uncertainty regarding interest rates underpinned a rally in the likes of technology and gold stocks, while China's reopening sparked a rally in energy and material stocks. Hopes for a soft landing for the Australian economy drove the banks and consumer stocks higher too. According to Macquarie's research arm, the ASX is poised to deliver profit growth of 3.3% with potential for upside surprises. However, the key risk is the outlook, where it's likely the lagging effects of interest rates will impact company bottom lines. More than 1/3 of the ASX 200 is reporting this week, with some of the country's blue chip companies delivering results. Here is a list of ASX listed companies reporting this week, according to Macro Capital. Here are 3 stocks to keep an eye on in the week ahead. Australian consumer giant and market darling JB Hi-Fi delivered its half-year results, disappointing investors despite posting solid growth. Sales increased by 8.6% for the period, while net profit after tax climbed 14.6% and the dividend was jacked up to $1.97 per share. The guidance from Group CEO Terry Smart cast a shadow over the results, however, who warned that sales growth is beginning to moderate. The business also flagged the beginning of a potential discounting cycle, which could tighten margins and weigh on future profitability. JB Hi-Fi shares slumped more than 5% on the day of the results as the stock's momentum shifts to the downside. Support, now resistance, is at $45, while price is now reverting to trendline support and a confluence of support levels. If they break, it may open a run towards roughly $43 per share. Commonwealth Bank of Australia reports its half-year results on Wednesday the 15th of February. Data compiled by Reuters suggests that analysts expect a 20.86% drop in interim profits to $5.1 billion for the half, but a 20% increase in dividends to $2.11 per share. Despite profit growth moderating from record highs, Commonwealth Bank stock trades near its record highs. It is trading at historically rich multiples, which appear to reflect a very positive outlook for the Australian economy and the bank's dividend as net interest margins rise with higher interest rates. Analysts are wary on the stock, however, with the consensus recommendation a sell. The technicals for Commonwealth Bank shares point to an unfolding reversal for the stock. The RSI is turning lower with price finding support at $109 per share. A break of that level may open a drop towards $107.26, while resistance can be found at the stock's record highs of $111.30. Trader favourite Fortescue Metals Group reports on Wednesday morning, with analysts expecting the company to report a 14% drop in earnings. Naturally, the fall has been driven by weaker revenues, reflecting the falling iron ore price in the last half. Despite what has been softer fundamentals for FMG, along with expectations of weaker profits going forward, the stock has become a trade on China's reopening. This optimism isn't reflected in analysts' expectations though, with the broker community recommending a sell and suggesting that the stock trades at a 20% premium to fair value. The technical suggests that the stock could soon fall in line with this bearishness. The daily RSI is beginning to trend lower and prices below the 5, 10 and 20-day moving averages. Key support appears to be around $21.50 per share, with a break there opening a possible retest at $20. Resistance, meanwhile, looks to be around $23.